in general, the positives are outweighing the negatives. And this is the macro number in January. When we see the credit numbers, the households are still buying property. Businesses are buying medium long-term loans for capex additions. And then I think this is coinciding when we see the PMI number, that business expectations for manufacturing and non-manufacturing sector are improving. And this is largely consistent with our analyst take at a single stock basis on recovery. Sector leaders, they're launching new product, new services, new end market, and raising capex. We got similarly strong manufacturing activity for container manufacturing, automation, lithium battery equipment, and heavy duty trucks. But there are some pockets of softness because the staying put policy. But for the full year, we're anticipating mid to high teens growth in EPS for CSI 300 and MSCI China.
Okay, interesting. World over, of course, we are talking about rising yields, and I wonder how that boils down to what's happening in the China bond markets and the PBOC's thinking regarding the same.
Yeah, I think that's a key concern for investors, because when we look at the January credit growth, it's quite rapid, and our economists are estimating this is going to decline from 13% year over year in January to 12.5% by end March, and to 10.8% by the end of the year. But overall, this is not meant to hurt the household income growth and then business recovery. It's just to temper and then to manage down leverage only very slightly by 2 percentage points, so that debt to GDP is 294% by the end of the year. So I think this is a mild neutralization rather than a sharp turn. But clearly that has gotten investors more worried because the high valuation. So I think on some of the growth stocks. So I think we have already started a phase of consolidation since the new year ended, the Lunar New Year ended. And I think this may last through the MPC, the 2 sessions. And then also when we get the first quarter and then annual numbers, people's going to get better visibility on growth for the rest of the year. And this is where we're going to see recovery and money coming back to growth.
So then that begs the question, Wendy, if indeed we do see further consolidation, particularly in the growth names that you're talking about that are sensitive to higher yields, if we see a better entry point, which of these growth names would you be wanting to enter into?
I think the broad consumption is something that people are always keen on. This is easy to understand, easy to analyze. And then we have a lot of POEs that are branded, innovative, and have platforms. So I pay particularly attention to the sector policies coming out of the MPC, whether this is endorsing Internet plus new economy in the 13th five-year plan, or this is moving further to broad-based innovation-led growth. I stick to both growth and cyclical growth names that are sector leaders and have some policy tailwind.